Hi everyone, today let's talk about Jerome Powell's speech. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Jerome Powell acknowledged once again inflation continues to come in higher than expected. He mentioned we did not expect this to be a smooth road, but it's coming in higher than anyone expected at this point. And I put out a video this morning about how PPI came in even higher than expectations at 0.5. The expectation for core was 0.2, so more than double the expectation. Absolutely not what we wanted to see. And he reiterated once again, inflation falling more slowly than expected is going to cause central banks to hold for an extended period. And we've been talking about this for a while. It seems like we're not going to see a cut until at least September at this point. And that's if we see a cut at all. We need to see some softer inflation data. And with the data that we saw yesterday on the New York Fed, they mentioned they think full year inflation is going to be 3.3%. And if it continues to stay that high, I'm not sure that we're going to see any cuts at all. And if that remains true and the rate remains between 5.25 and 5.5% for that extended period, then we will absolutely see some economic weakness and some market weakness, in my opinion. Moving over to fear and greed, you can see we ended up at a 54 today, so this continues to trend higher, and everything is still pointing to bullish on this index. Momentum, still in greed, strength, still in extreme fear, so still mixed on the indicators. Pretty interesting to see that. Breadth is making gains here, but it's still in neutral. Put call ratio jumping up into extreme greed. We also saw volatility selling off a little bit, still in neutral though. And bonds, they have evened out here. They're both in neutral now. And I think it'll be interesting to see how that plays out after the CPI data. Are they going to hold at these levels, or are we going to surge into greed once again? Moving over to seasonality, this is still a seasonally weak period. We have not seen that at all, so we'll keep talking about it. Eventually there will be a dip, but right now everything looks bullish. Moving over to Fed futures just for a moment, I want to highlight September is still that first cut. It's a 50% chance of cutting down to 5 to 5.25, and that's even after the data today. You can see current probability actually stepped up a little bit. We'll definitely check in on that again after tomorrow's CPI, but I do expect CPI to come in a little bit hot. Moving over to earnings, we did have Home Depot post this morning. They did beat on the bottom line but miss on the top line, and they were basically unchanged on the day. It's an expensive company, but they do have a lot of business, so they basically stayed flat on that earnings report. And then tomorrow you got Cisco, and then for Thursday, Walmart and John Deere, and that'll pretty much wrap it up for the week. Palo Alto is on next Monday, and then you have Lowe's on next Tuesday. Moving over to the economic calendar, you can see those PPI data, 0.5 for core, versus 0.2 expected, 0.5 for headline, also 0.3 expected, so way higher than expectations. It was interesting to see the previous numbers revised down so aggressively though. I wonder if that's why markets were a little bit more forgiving on this data. I thought we were going to spike down, and we did, but very quickly it was bought up, and then we ended up higher on the day. Moving over to Max Pain. Max Pain's still down at 510. We finished up at 523, so we're headed in a different direction. Puts jumped up a ton, and so did total options, so 4.39 and 4.1 million options now for the end of the week. There are tons and tons of puts in the market. 520 was that call wall. I don't think we're going to finish. It's not a huge call wall though. You can see how many puts there are. 500 still being massive at 140,000, 510 at 70,000. So top of the puts right now, pretty much right where we're at, 523, 524. But all of this is going to depend on what we see from CPI in the morning. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily. You can see on that last hour of the day, we got a really strong push. Ended up finishing much higher on the day. Let's go ahead and extend out that trend line. You can see we just barely touched it and then started to pull back a little bit on that hourly chart. Next level of resistance, 524.23. I would expect that we're going to touch that at least for a moment tomorrow. We'll see how CPI goes, but usually you throw wicks in both directions before we get a clear direction. And now you can see momentum on that daily chart stepping back towards bullish. We're right at that zone. You can see that level is the all-time highs here back from mid-March. We'll see if we can overthrow that level or not. I would expect that we will, at least to some degree. But if we reject from that level, this could absolutely be a colossal down move. Major double top on the daily time frame with a clear midpoint. If this structurally breaks down, there could be a lot of downside. But at the same time, if we break out and we hold that structure and start to push into price discovery, there could be more upside to be had. So definitely have to be patient and make sure that we are reacting in the right direction. Moving over to the Tasty charts, you can see we are dangerously close to that that upper ATR, 524.92. That is the critical zone here on the SPY. We've been watching it for a while. Conditions are still bullish, so it could absolutely go higher, but that is the zone where I am expecting resistance. And then looking at that 4-hour chart, you can see pretty much the same thesis. Upper ATR, 525.07, continuing to hold that 8 EMA. Everything looks bullish. Momentum not super strong, but you can see some volume coming through on that push at the end of the day, which is bullish. And based on that, you would expect to at least hit that upper ATR, and then we'll see how it finishes out for the week. But everything still looks strong here, which does fit with the overall thesis of a slightly bullish market. Moving over to the NASDAQ, very similar thesis. Again, sideways choppy price action, hit those previous highs from the last 2 days. And then here today, jumping almost to that next level, 446.66. That's the critical zone. You can see it here on the daily chart. Again, same thesis. If we reject from here, it's going to be terrible. If we break out from here, could be in price discovery, something like that. So if it rejects and takes out this midpoint, there is absolutely a ton of downside potential. We'll see how that plays. But zooming in here, there is a chance that you do find some support around that 21 EMA, which would probably be trading around the 433.50 area by the time you reject and get into that zone. So that would be interesting as well. Hold the higher low and then push. It's certainly possible. Overall, still looks bullish, and we're pushing towards that upper resistance, and we'll see what happens there on CPI. Moving over to the Tasty charts, similar thesis to the SPY here. You can see that upper ATR, 449.41, so you do have a little bit more room on the NASDAQ, about another 1% potential on that daily chart. And then similarly here on the 4-hour chart, upper ATR is at 447.26. So again, you got about another 0.5% higher, but look at that volume, pretty decent volume on that buying. So it seems like somebody was buying headed into this CPI. We'll see how that comes out tomorrow. We're right at the highs too, 446.12 after hours. Everything looks pretty decent. Just looking at those upper resistances as a potential pivot point. Moving over to the Russell and the Dow, you can see the Russell popping up here above that level. 206.50 was the resistance. Gapped through that, almost got all the way to trend resistance. That's at 208.15. Right there at 208.22 is my level as well. Momentum back into bullish. So everything looks good here, continuing to break higher. Again, we'll see what happens after CPI. If this pushes through and holds, it could head to that 212 area. But if it breaks down from here, we could be looking at that 21 EMA back down in the 199.50 area. And looking at the Dow, similar thesis. It didn't break to a new high, but it did regain some of the losses from the previous day. 0.28 to the upside. Momentum did not regain there, which is a little bit concerning, but overall still looks decent on this move. Moving over to stocks that moved today, of course, we have GameStop. It is up 179% in the last week, an absolutely colossal run. And it really had been popping prior to this week, but so far it's been massive. And let's jump to the daily chart so you can see what that looks like. Basically ramping straight up. There's really nothing that you can do chart wise. There are some levels in here. Potential support 44.70, potential resistance at 62.87. We're right at that 54.92 area. But again, these levels are kind of arbitrary. They are based on previous price action, but when stocks are moving like this, everything looks crazy, and it's going to do whatever it's going to do regardless of support and resistance, in my opinion. But right now, you can argue that this does look okay. In fact, the reason that I actually liked this stock here in the mid-session was you had a clear low, got a bounce, hit the 21, got a clear higher low setup, and then we started to rally into that end of the session. Now we're right at that resistance, and typically GameStop does have larger moves after hours in pre-market, similar to this. You can see it the previous day as well, gapped higher, ran pre-market. During the session, didn't really do much at all, and then you can see that move after hours in pre-market again. So I think here, if we get a nice little run pre-market, this could absolutely top out and then hit these previous highs. GameStop is on a run, and meme stocks are back in. And then you can see Broadcom, a much more calm company, actually running quite a bit here today, 3.18%. It's been on a run. It's probably headed back to that 14.14 level, which is the previous high here from the beginning of March. Moving over to Apple and Tesla, you can see Apple gapping up and dojing here again. So very similar to the NASDAQ chart. Seems like Apple might be driving the NASDAQ here a little bit. Let's go ahead and extend out this trend line. Not really anywhere near that yet. Next level, 189.96. Could potentially hit that tomorrow. We're very close to overbought conditions. And you can see a positive couple of days, fits very well with that Tesla thesis. You can see on Tesla, we talked about 21 EMA being potential support, got an up candle, and now we gapped higher and rallied, and we're back above that resistance. Momentum stepping back to bullish, RSI at a critical zone. We talked about this a couple of weeks ago. We expected the pullback. We said if it was going to hold, it needs to do it there. You can see this previous consolidation needs to break higher from here if it's going to do it. If it gets above 177.70, we're probably going to go on a run up to that 188.50 area. So Tesla actually looking pretty bullish going into tomorrow's session. Moving over to Amazon and NVIDIA. Amazon up 0.27 after dropping right back down to that trend line. Momentum still fading, so this is a little bit concerning still, but it held the trend support, so we're expecting this to push at least to the resistance, 188.61, about $1.50 higher from here. And then we'll see what happens if it can get to that next resistance. Similarly on NVIDIA, touched that 9 EMA, got back above the level 909.59 and the trend here. So as long as it can hold that structure here, then you're looking for that next level at 960.84. Moving over to staples and discretionaries, you can see staples pulling back from resistance. We talked about it being a possibility. Structurally still very bullish, but momentum starting to roll over here. Been a pretty solid run, 73 up to 77.50. Actually got into the 78s there for just a moment, and now we're pulling back. And discretionaries actually showing some strength back above the resistance. You can see it here. 178.43, next level 180.10. If it gets above that, we've talked about it for a while. I think we can get back up to 185.36. But that is the major zone of resistance, and we need to get back above that first. And you can actually see it here on the RSI. We pulled back to that SMA, and that SMA needs to hold up this RSI and push higher if it's going to do it. So see how it plays out. Might be seeing a little bit of rotation into some risk on tomorrow. Moving over to oil and gas and utilities, you can see oil and gas has been in this bull flag setup. Massive run, rejected off of resistance, bull flag. And now you can see we're holding a slightly higher low. If it's going to do it, need to see it break here. If it does, there is a lot of upside potential in my opinion. Typically the run is a similar size to the run into the flag, which is about 20%. If you get another 20% run, that would push us basically up to that next resistance around 177.70. So that could be absolutely massive. Something to watch here on oil and gas. Seems to be showing some structure and some bullishness potentially. And then utilities, again, similarly on a massive run, but it's consolidating at resistance. You would expect this to roll over. Momentum is fading here a little bit, which does fit with the overall thesis of pushing back into some more growth and more risk on plays. Moving over to breadth, you can see 20-day breadth is basically in this previous consolidation. So we're there on 20-day breadth. Now we need to wait and see when this is going to roll over. It can take a while. You can see momentum was fading through here. I actually saw bearish momentum through here before we eventually saw that bigger breakdown. And you also need to time that along with the 50-day, which continues to go higher. We finally hit that 62.25 level. See if we can push to the next one, 68.66, or even all the way up into the 77 area. Right now, momentum and RSI on 50-day breadth are super bullish, and 20-day breadth is likely to chop sideways in this zone of resistance. Moving over to the dollar, as you can see, it did break down as we kind of expected it to. We were watching this trend line, we were watching the 9 EMA, and now this seems like it's going to accelerate down to that 55 EMA at 104.65, and if it does that, that should be quite bullish. Momentum and RSI are bearish for the dollar. Again, this fits with the overall thesis of some bullishness left in markets. Moving over to yields. Yields sold off on that PPI news. Pretty interesting. We're still right in that same zone that we've been in, but this looks a little bit more bearish here. Kind of looked like a consolidation, pull back to the 21. We didn't quite make it to the 21 and then we sold off, so that looks a little bit more bearish now. Couldn't even fully make it to the resistance before selling off. Again, CPI is going to determine direction, but this looks a little bit more bearish than it did yesterday. Moving over to bonds, pretty much the same thesis. We were watching this pullback. We were looking at the 21 EMA on both of these charts as a potential zone of support. Didn't even pull back to that zone yet, and then we got a bit of a bounce, so we'll see how it plays. Right now, both of these look pretty bullish going into tomorrow's session. Moving over to volatility, you can see volatility on both of these did pop up for a moment, and then the VIX did start to pull back a little bit. Seems like we're going to see some consolidation here, just like we did on this previous iteration. CPI could send us much higher, but obviously it's going to be dependent on that print, so right now we did have a bounce off of support. Momentum starting to roll to bullish. We did see a little bit of a rejection from this previous consolidation here. So a little bit of volatility, but nothing crazy. Moving over to my accounts, I made a few $100s on the day, as you would expect. I was bullish going into the day and everything turned out bullish. IWM, I rolled that out a day here to 206 for $2.48 credit. So max profit there, 208.48. And then we can always roll it out a day if I need to. But right now I'm in good position. Qs, same thing as yesterday at the money puts, 446 for $2.16 credit. And then I did roll out my call here to 450. I actually took it off, allowed markets to run a little bit, and then added it back on for 2 days from now at 450 for $1.10. And that allowed me to be in a little bit better position here. And then I rolled out my 437 call to 438 for $7 credit. I paid a small debit to do that, but now you can see the max profit on that position is 445.81, and you can see we're already there at max profit, and that's 3 days from now. So we'll see how that plays out. Obviously the CPI data is going to push around markets, but plenty of protection on that position, just trying to make a little bit of money. If we were to stay right at this closing price, that $244 would come in over the next 2 days, so that's not terrible. About $100 every single day on that position, plus the puts and the calls that I have going into tomorrow's session. So overall in good shape for those. And then I did dabble a little bit here in GameStop, just a small position to see how it plays. It's a $3 call spread and I paid 87 cents for that. So looking to make about $100, maybe $200 on that position. And you can see it's up quite a lot after hours, so way above that 53 call strike. Probably take this off tomorrow. It did look like a good setup like we talked about on the charts, and I didn't want to do anything too risky here, so just risking that 87 cents, which was the debit that I paid for this position, so $87 with the potential to make about $2 on that position. Let me know down in the comment section what you think of inflation and Jerome Powell's speech, and what do you think the forecast is going to be for CPI tomorrow. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.